Hello and welcome along to the Property Academy podcast by Opus Partners. I'm your host, Stephen Knight.
And I'm Andrew Nicol.
And to the show, we've got a New Zealand property market update and specifically looking at what's not being said in the media at the moment. We just got new property market data come out last Monday, so we're going to dive into the details, look at what's happening, because the interesting thing is that the property market bottomed out in about May 2023. That's basically just over a year ago. And property prices rocketed back by well over 5% in about 6 or 7 months after that. They kind of flattened out till February. And, if I took you back to some of the podcasts we recorded in February, Andrew, we were really positive about the property market because in the space of about 9 months, property prices were up well over 5%. And we were like, wow, the property market is rocketing back. And since then, we have seen some house price declines. The property market's been pretty weak over the last 3 months, and some of those house price increases have now been wiped out. Now, we're still above the bottom of the market where we were in May 2023. It's not a second bottom of the market yet, but we have seen some house price declines by about 2.9% of those gains that we had have now been wiped out. So what's going on there? Now, what are you seeing in the property market at the moment?
I think the biggest thing at the moment is how investors are feeling. So if you think about investors or even home buyers, there's a bit more positivity, but these interest rates are really making it difficult from a cash flow. So people aren't diving in droves, but the really savvy investors, they are much more in touch with the market than they were 12 months ago or 18 months ago. So some of the more experienced investors I work with, they're getting pre-approved now to kind of wait for a deal to come along.
Okay, that's pretty brave because we're seeing some pretty interesting and scary headlines. I saw one in the Herald where they said house prices flat in May and buyers are taking time to make their decisions. So we are seeing in some areas the days to sell is almost back where it was at the bottom of the market. I saw another one. Housing market rally stumbles as New Zealand and Auckland prices fall. And also on Radio New Zealand, no sign of property prices going up. What's happening in the housing market this week? So there's a lot of negativity out there.
Yeah, there is a lot of negativity, but it's definitely a buyer's market right now. Remember, we spoke about the property clock a few weeks ago. And when it's a buyer's market, people should be buying, but they don't because there's often this negativity, and that's what creates a buyer's market.
Okay, and the other interesting thing is that, where was I going with this? And looking at that data, Andrew, I'm almost wondering whether we call it a bit of a double dip downturn where we had
double dip down.
Yeah, you like that downturn, double dip downturn. That's the phrase I'm going with because we saw house prices fall, go up, and we're seeing a bit of that fall again. Now, some of that will naturally just be because it's winter, right? And during the cooler months, we tend to see house prices cool. I actually wrote this really interesting article for One Roof a couple of months back where we saw that, during April, during May, and then into June, those tend to be some of the weakest months of the year, along with kind of January and December. So the thing I always say is, if there's going to be a downturn, you're probably either going to see it in December and January or April and May. And that's what we've seen over the last couple of months because those are the weakest months of the year. Some of that's because we've got a lot of public holidays in April, same with June. Some of it's the colder weather and we all decide that we're going to stay at home. But for whatever reason, those are the cooler months of the year. Now, the interesting thing thinking about those house price falls, Andrew, is that back in February, we recorded a YouTube video. And I think it's fair to say we came across as quite smug.
You? No, I don't believe it.
Well, not me, but certainly you, Andrew. And we were talking about that idea of the dead cat bounce, right?
It's a horrible term, isn't it?
It is.
Only because I like cats. Okay, call it a dead dog bounce any day.
Well, it's called a dead cat bounce. And that's where, house prices or stock prices in this case fall. They start to increase and then they start to fall again. And back in February, we were on the show talking about, hey, no, we don't think this is any sort of dead cat bounce where we're going to see substantial house price falls after this initial uplift. Now, were we a bit too smug? Were we a bit wrong, Andrew? What's your view? Is this just the dead cat bounce and we're going to see large house price falls from here on out?
I definitely don't think so. I mean, here comes my smug face again. I mean, we had a 16...
You do look smug, actually.
Yeah, that's just my face. We've had a 16% drop since the peak of the market, right? we're not going to see any kind of more meaningful drop than that, I don't believe. Yep, there's obviously a bit of a dip at the moment, but that is just that's winter for you. When I see these kind of every winter, I see there's more rentals available than demand, or often that's what I see. I see property prices slowing down or going back a bit. I've seen this for the last 20 years. It's not that surprising. I don't think for a second this is any kind of proof that we're going to see a major drop in the market.
Well, I don't think it's just winter, though. A lot of it comes down to the number of listings on the market. So if we look at currently at the amount of housing stock, so this is the number of properties available for rent on realestate.co.nz. Since last May, we've gone from about 25,000 listings on the market all the way up to about 32,000 listings.
Yeah.
So there has been a sustained and substantial increase since May. We've seen a lot more listings on the market. Now, what's interesting is that we are also seeing the number of properties sold increase. So we're seeing more houses being transacted. So that is an indication that there is more demand out there. But we are seeing more listings on the market. So there's been a larger increase in supply than there has been in demand. And because of that, we're starting to see house prices fall away a little bit. Now, what's interesting, Andrew and I, we were just in Nelson the other week talking to a group of about 150 property investors in Nelson. It was a great event. And one thing I was talking about is over the next 6 months in New Zealand, I would expect some of that weakness to continue because if we think about the number of listings, as soon as we hit the 1st of July, and this podcast is being released, I think, on the 1st of July.
Yes, it is.
I think, is that right? I was looking at producer David say, is that correct? So this is being released on the 1st of July, and on that date, what's happening?
Brightline is being brought back to 2 years, and that's for any property. And so the biggest thing now is there's going to be a lot of people that would have been caught by the 5 or 10 year Brightline that would have paid a significant amount of tax potentially if they made a profit when they sold that property. Now they're not going to have to.
Yeah, even if you think about somebody who bought in 2020 in Christchurch, right? They would have been caught with a 5-year Brightline test. Even though property prices have declined, they would still be up about $200,000.
Wow.
So if a property investor bought in Christchurch 4-ish years ago, if they sold their property today, they'd have to pay about 70 grand to the IRD, depending on what their specific tax rate is. And so as soon as this podcast gets released and the 1st of July comes along, what we're going to see is that those people can then sell that property without having to pay 70 grand in tax.
Yeah.
So even if they're struggling with high interest rates, they're like, I really want to sell this investment property, but I'm going to wait till the Brightline changes so I can sell that and keep that 70 grand. So that's why I think we're going to see an increase in listings.
So I think you'll see that you'll see some of them straight off the first cabs off the rank. Then you'll see a few people wait till kind of later on in the year, till maybe summer or something like that. So you probably got a 6 month, maybe 9 months, of more listings than normal, right?
Yeah, and I think what's going to happen, though, is that's going to be a one-off.
Correct.
So when that happens, there's going to be a lot of people say, is this going to continue forever? Is the housing market completely munted? The answer is going to be no. This is a one-off occurrence. And what we're going to see is a lot of listings. It's going to take some time for those to work through. Of course, the summer months are nicer for the property market. We see more properties transacted. We start to see house prices increase more of the time. So those listings will start to be worked through a little bit in there. And I think once we get into 2025, that's where we'll start to see the housing market come right. That's because we'll start to see all of those listings worked through. We'll start to see interest rates begin to fall. That will bring confidence back to the property market, and you'll start to see house prices rise a bit. And it's actually not just us saying it, Andrew. We actually just looked at the house price forecasts for many of the major banks. Oh, look, my Reserve Bank logo is not looking too nice in this one. And what we're seeing is that someone like BNZ, their latest forecast is they think that house prices in the year to December 2024, probably not going to increase that much, about 2%, they're saying. But next year, they think that house prices are going to go up 6.9%. So almost 7%.
Big jump.
Big jump. Same with the Reserve Bank. They're saying 2.3% for 2024, but 2025, almost 6%. ANZ, they're going from 3% to 5%, and Westpac also thinks in 2025 will be closer to that 7% mark. And so it's quite noticeable that if you poll most of the economists in the country, they're saying property market going to be pretty tough in 2024, i.e. we're not going to see house prices increase that much. But once we get to 2025, we should have more smoother sailing. Not smooth sailing, but smoother sailing.
It's going to be interesting as well to see how different regions perform at different rates. So whilst you might get, let's say you get an 8% out of Auckland, but you might get a 2% somewhere else, or you might even get negative growth in some places.
Yeah, it's quite interesting. Auckland's had house price fall quite a lot house price falls more recently. They fell 22%. They recovered some. Now they're seeing it decline again. I think we'll probably see some strength in there in 2025.
Yeah.
And part of that's going to be those interest rate changes. We recently went out and talked to a lot of economists. We released this last Monday as well. Most economists are saying, look, we don't think we're going to see that many interest rate falls in 2024 over the next 6 months, but we'll start to see more interest rate decreases once we get into the start of 2025. So the combination of the increase in listings from the bright line, those will be worked through, decrease in interest rates, that's where we start to see the house prices increasing. And we also recently interviewed Paul Conway, the chief economist at the Reserve Bank, and asked him about that interplay between interest rates and house prices, which we'll play for you now.
Between higher interest rates and lower disposable incomes versus population growth. We do have the OCR, or interest rate declines, starting to be contemplated from next year, and that will show up. That tends to affect the housing market. Pretty in a dependable sort of way, actually.
And I really like that line. Interest rates impact house prices, quote, in a pretty dependable way. And I think we all know that interest rates are quite high at the moment. We know they're likely to come down as we start to see inflation ease. That will play into house prices. But Andrew, some people will look at that double dip downturn and say, "Oh gosh, that's not very good news, is it?"
It's the end of the world.
What do you think? What do you think's the silver lining, if any?
I think the silver lining is we've absolutely turned the corner, and we've seen the bottom of the market. So if you think, "Oh, I missed the bottom of the market," and you're one of those investors that feels disappointed about that, there's opportunity, and there's probably going to be opportunity for the next 6 months. So if you want to get a good deal, again, be it for an owner occupied or an investor, I think there's going to be opportunity over the next 6 months. But again, don't sit on your hands and wait for every last dollar. Who was it that we were talking to? Tony Alexander, when he was talking about, looking back and saying, okay, well, you missed the bottom of the market, but, if you get in a couple of months after, still great deals. But if you wait too long, then you really do miss out.
Yeah, let's play that clip.
To put it in perspective, I don't think a single person, young person looking at buying, investing or whatever, has ever heard their parents or grandparents say, "I bought my first house in 1982 for $68,000, but I've always regretted that I should have waited 3 months and I could have got it for $67,100. Yeah. It's completely meaningless if you miss the bottom of the cycle. Absolutely. When you take a long enough time period.
I'll listen to you talking over him all the time.
Oh, just shut up. Just because he's your boyfriend. He's got good skin, doesn't he? Don't you think? He looks quite young for his age.
Well, I was listening to what he was saying. I wasn't fantasizing about his face.
Can you not do two things at once?
And I think the main thing there is we're trying to buy in the right year, not necessarily the right month. And the truth of the matter is we currently have house prices about 16% lower than what they were at the peak of the market. Eventually, we'll get back to what house prices were back in November 2021. It might just take a couple of years to get there. Right, let's wrap it up there, but please don't forget to rate, review, and subscribe to the podcast. And if you're listening to the audio version of this on Spotify or Apple Podcasts, you want to see some of the graphs we're sharing, just Google Opus Partners YouTube. It'll be the first thing that comes up. If you're watching on YouTube, make sure you hit the subscribe button. We release new videos every Monday and Wednesday. Thanks for listening to the Property Academy podcast. I'm your host, Cedric Knight.
And I'm Andrew Nicol.
We're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the New Zealand property market. Until next time.